Hi everyone, and welcome to Tuesday when we're going to take a look at how the performance of the NZSX50 has been over the last week. So let's jump across. Oh, just before I do, remember that this is educational purposes only. It is certainly not intended to be personalised advice in any way. If you're looking for personal financial advice, then you do need to go and speak to your own financial planner. Like I often say, these are the methodology and tools that I use when I'm investing in the New Zealand share market. So I'm hoping just to provide you a little bit of education around what I do. And also, before I jump across, just remember, if you're wanting to know anything, if you wanted me to research a share or anything like that, just reach out because I'm happy to teach what I know and the methodology that I've been using. Right, so as you can see here, I have got the NZSX50 up, which is the main board of the top 50 companies on our New Zealand Stock Exchange here. So we did have a positive week last week, which is good. I mean, the week before was down. It looks like we really are in a sideways pattern here, and this has been going on for quite some time. As you can see here, it's been trading in this range since, oh gosh, probably about the beginning of 2022 is where it's been trading in this range that we're sort of seeing now. So I'll put the indicators on, being the moving averages, and I always use the 30 and just have a look there. So I'll just take that back to the 2 years so we can see it again. So the market has closed below that. And for that very reason, when I see that, I'm not looking for any other buys or anything like that. Reason for that is because potentially the market could be a little bit volatile, and I don't want to get hit out of shares unnecessarily, okay, with my stop losses. So that's why I'm not looking to enter anything at the moment. The overall index goes below that 30-day moving average, yeah, I just hit the pause. Not saying that though, for any shares that I have got in the portfolio, which I do have a few, I let them run, okay? I let them go because at the end of the day, there are a very small handful of shares that are outperforming the New Zealand main board, and those are the ones that I want to keep hold of, because if they are increasing in value, then yes, let's ride with that. And I use my stop losses to know exactly when to get out of a share. I'll just check the volatility on this. So to check the volatility, we take the closing price and just divide it by the ATR down the bottom. Done it the wrong way around. So divide the ATR, sorry, by the closing price. So we're looking at about 1.8% volatility. So once, if the index gets up to that 5% mark, that's definitely another red flag for me. So at this stage, volatility is fine. We're in this sideways trading band. Now I'm also going to go and have a look at the ETF FNZ. And why I'm going to do that is because this is what we refer to as an equal weight exposure. It's a exchange traded fund. So it's the top 50 companies on our stock exchange, but it has about a 5% cap to all of the different companies. Okay, so it's equal. Whereas there is another one that does mirror the NZSX50, another ETF that mirrors the New Zealand Stock Exchange, and it's weighted exactly as the main board is. And if you wanted to have a look at that, just pop on to Smart Shares. That's where they have some very good ETFs. So again, same deal here really. It's well performing, well below the exponential moving average of 30 weeks. So it's definitely a red flag. And that's because what is holding that main board in that sideways pattern is a very small handful of stocks. I think I counted last week about 6 or 7 stocks that are actually outperforming the main board. And that is what's keeping it in that sideways band, if you like. Companies like Gentrack is certainly one that has been performing strongly. Let's just put the 5-year chart on, and again, this here has been going through a sideways band, and it looks like it's starting to drop off. In fact, if I change that and make it a 200, just going out longer gives you a bigger picture. So yeah, it's trading well below that 200-week moving average. So it does look like it could potentially be on a downward slope. Hey, I'm not into picking markets. I don't know where tops and bottoms are. And I'm certainly not going to confess that I do, but these are just some of the tools that I'm using in order to gain an idea as to whether I should be looking to open new positions or whether I should just be holding tight, which is certainly what I'm doing, just holding tight and just waiting and seeing, because markets will always change. And when I used to give financial advice, as I said to people, there will always be opportunities in the market. They just change. Okay, so it's about being adaptable also in your own methodology. Now, I hope that's helping. Like I say, ask any questions, happy to help, but come back on Thursday and we're going to take a look at Fletcher Building. Have a great week.